Good afternoon, ladies and gentlemen. Let's get straight to the point of this video. I opened up a secondary trading account, loaded up with $1,000 to see where I could take it in 4 weeks' time. And just so you don't have to go to the end of the video, the answer is 3K. So what I want to talk about is the issues I found with a 1K account, why this trading might not be replicatable for newer traders, and my strategy and how I got to where I got to, along with the risk management component. So if I seem distracted at any point, it's because I got a kitten roaming about that could cause a bit of drama. Say hello to my little friend. Hey? Say hello to the baggies. The bag holders. Okay. Alright then. So, the first thing I want to do is show you guys all the prints for the last 4 weeks, because there's always someone that calls bullshit on these videos, so I may as well show you guys every single trade that happened. And while it's scrolling through these trades, I want to mention a couple of things. Firstly, on the prints or on these trades on the spreadsheet here, these are not individual orders. So what I mean is that, let's say I have 1,000 shares for the buy side. If that gets sold into, let's say, 200 shares at a time, that's going to show up as 5 buy orders at different times. It's not going to show up as a single order. And the reason I showed it this way is because I can show you guys in chronological order every single trade. Because in Iris Viewpoint, if you group the orders together, so if I just show you just the 1,000 shares, it's not going to show you the trade date and time in chronological order. It just shows up as a dash. So it's pretty unhelpful. The second thing I want to mention is on the spreadsheet here, on the starting balance, it's incorrect, except for the very first day. Now, I didn't realize this about Viewpoint because I really don't pay attention to the starting day balance, but what happens is if there's an overnight trade, and I've held quite a few shares overnight, it actually doesn't give you the correct starting balance. So what one would expect is starting day balance, and then whatever you make in terms of profit, minus brokerage would give you the starting day balance, right? So end of day balance minus brokerage would give you the starting day balance for the next day, but that's actually not correct. So kind of disregard the starting day balance because this was just data pulled from Iris Viewpoint, which just isn't correct ultimately. End of day balance is the one that's probably worth paying attention to, and all the other data should be correct. We've got the turnover that I've taken from every day, which you could see from the spreadsheet there. We've got the brokerage, net profit, and percentage gain, which factors in net profit against the starting balance as a percentage. So you guys can also see a visual representation of the end of day balance, and hopefully you guys can see that it's cutting losses quickly and just writing big winners or bigger winners. So you kind of end up with this growth on the end of day balance or equity curve, if you will. You can see not much happened in the first 8-9 trading days, or pretty much the first week and a half, which is unfortunate, but you can see that it's just about cutting, making small winners. It's basically just a pillow fight, right? You're just making small wins, small losses, trying to make more winners than losses. But ultimately, the point is to ride the bigger winners. At least for me, that's the case. And yeah, so I might as well show you guys. This is on day 1, so a screen cap of Iris Viewpoint in the portfolio section, what it looks like, what tickers I traded on the Monday. This is for Tuesday. I forgot to screen cap on some days because apparently once it hits like 8 p.m. or 9 p.m, the portfolio screen just goes blank, it resets. So ended up just pulling out the course of sales and manually filling it in. So I got a couple of those. So I got day 3, day 4, day 5. Sorry, I didn't include the profit for the day on this screenshot, but you can see on day 5, it's practically net profit of $20. So it was pretty uninteresting that day. Day 6, again, forgot to screen cap, so I did it the next day. Day 7, day 8, 9, 10. And so on. I may as well just go through the whole list. You're welcome to pause it and go through it later as well, but I just want to go through it quickly just to show you guys what was traded for the day, so you don't have to just see the spreadsheet. It's a bit better visually. I noticed I didn't include, I think it was Friday, I was out for drinks, and thank you everyone that showed up for drinks that day. That was in Sydney, Brisbane, and Melbourne, so free drinks night out for everyone. It was great. I think we blew about $3,000 in Melbourne, 2.6k in Sydney, I think it was, and $1.5 in Brizzy, so it was a good night out. I hope you guys enjoyed it, so thanks for everyone for coming out, and hopefully we'll host another one next year. So Friday, drinks night out. I probably took 1 or 2 trades and just didn't have the screen cap for that one as I was in a rush to get on the flight. So that's that, and now we're going to take a look on TradingView of sort of the more interesting trades, I guess the trades that spiked to the upside and were more significant to this trading account. So we're going to take a look at the first trade here for WC1 that stood out, and that was on the 30th of March. So just going to scroll through to the 30th. And these are the prints for WC1. And I've drawn them up on the spreadsheet here. You see the buy entries. WC1 was a news announcement, if I recall, for Rare Earth Project. So 11 meters at 3,600 parts per million, which is pretty significant considering most trios tend to be significant at around 1,000 parts per million, depending on the strike length, of course. So, if you've got 60 meters of strike, then 1,000 ppm gets interesting. If it's like 11 meters, then obviously it needs a higher grade, and this is why it sort of took off. So this is the announcement. This is the trades. These are the prints. We got pretty much buying the bottom here and waiting for the breakout, which it pops to the upside, and then just selling into that strength. Now, in terms of market capitalization, this I don't think would have gone past 15, 16 million market cap. It probably was even less. The point is that there was a bit of a discrepancy between the market caps from where I thought it was to where it should be, and that's pretty much what this trade was. So a small gap up, which helped, because if this gapped up even harder, it would have made it a more difficult trade. But you can see the liquidity is pretty light. You've got 29,000 here shares. You got 47,000. The volumes are pretty light, so which is perfect for this small trading account. It just pops to the upside and then starts scaling out as it reaches my market cap target. And the market cap target really is based on peer comparisons of what I know other companies have done and what sort of market cap peaks they reach based on their drill results. And also keep in mind, rare earths were sort of on a boom because of other companies. So you got lithium and rare earths sort of back in action lately. I think LTR was the one sort of really popped off, and then the lithium and rare earth sector kind of moved along with it. And so this was based on that as well. It sort of helped push it to the upside. And then what we got is a buy just below VWAP. We can see VWAP is right in between 12.5 and 12, so I want the better entry possible. And then it started to sell down on high volumes. You can see there's a volume spike here at 11.5, so I just sold a good chunk there. And then I was expecting it to sort of roll over. And another thing worth noting is that there's a pivot point here. So it's like, it's nice that it got to 12 cents because it's in between the pivot and VWAP. And, as nice as it would be to get 11.5, I think that's a bit too greedy. So sold out a portion, rebought as the order book changed. The buying changed as well. You can see just visually how it just keeps making lower highs, and then that's the first time it sort of reverses that momentum. So immediately got back into it, comes back down a little bit, buy back into it, and you can see the big volumes come in. You might be wondering, well, why sell out so early? Now, there's two aspects to this trade. Firstly is the market capitalization is probably where it should have been in terms of like peak market capitalization based on peer comparisons. The second one is you've got this volume here, and look how far it's gone. It's gone one tick, 13 to 13.5 on some of the highest volumes it's had in the day. You compare that to the volumes in the morning, and you can see it's shot up from 13 to 15.5. That's about 5 ticks. 5 ticks on good volume compared to 1 tick on higher volume. So there's a bit of an issue there with volumes in terms of just churn. So I don't like that, right? If I got higher volumes and I got substantially less price action as a result of that volume, we're getting the fuck out. That's what that is. So scale out, scale out, scale out. Again, like I mentioned, there might have been one ticket instead of multiple tickets, but on the spreadsheet, it might show that I'm being hit several times as I'm exiting. So that's why these orders look like this. So that's it for WC1. The stock just dies like all the other speckies do. The next trade was 4DX. This one I got on really late. I was trading this on my main account. Liquidity was nice. And then once the initial drive was sort of drying up, I got onto it on the secondary account and really just scalped it here for fuck all money, and then just tried sort of scalping it again. So won a little bit, lost a little bit, won a little bit more. But the bulk of the trade, or the bulk of the profit on this day, which is pretty significant, was from 51 to 54.5. So just under 10%, more like 8%-ish, 7.5%-ish on that move alone. So what that was just a volume breakout. You can see there's a pivot point. We all know I love my pivots. We've got a high volume break to the upside. So it's quite straightforward, follow the money kind of thing. I know there's a lot of traders out there that look at this and go, the highs, it's just made new highs. Why would I want to buy the new highs? Because of volume. It's you know, a lot of people like the idea of buy low, sell high. So it's like buying here and selling here. But if there's no technicals really, buy high, sell higher tends to be a more favored motto for me. And this is on the back of some medical US SAS contract. I mean, I actually thought it was a bunch of nothing. It read like a bunch of nothing. There's no financials in it. There's no understanding of where this could go, which I guess is the speculative aspect of it, because no one knows what it's worth. It's a 5-year contract of some biomed stuff. To me, it reads like nothing. It actually reads like nothing. Don't know what that contract is worth. I know I know the duration, but I don't know the cost or the value. So it's all speculative. So that's what 4DX was. The next trade that was significant was WMG. Now this one, I was confused why it didn't move for so long. So we're going to look at the announcement real quick. And I guess in hindsight, when I look at it, it makes sense why it didn't move straight away. People are hesitant when it comes to low-grade stuff. Now, the way I look at low-grade stuff, whether it's gold, lithium, it doesn't matter what. In this case, it's nickel. If there's low-grade stuff in the ground, if there's fucking kilometers of the stuff, it's probably going to move, particularly for the market cap that this had. Just want to double check the market cap at the moment. Yeah, 18 mil market cap at 44 cents. And so given that market cap, it was half that. So it was 9 mil market cap at this point in time. 9 mil market cap around here. Super low market cap. Shares on issue would have been low as well. Around 100 to 120 from memory. So very low shares on issue, which also was a little bit confusing for me at the time as to why it was so illiquid or why it wasn't breaking out so soon. Because higher shares on issue tend to have bigger moves, right? This was a play for the range, effectively. Now, obviously the range break is more like here, but my interest was the volume spike after just dwindling volumes. Volumes are everything. So break to the upside and just rode the momentum. Now I could have held this a little bit longer. I have a problem sometimes of closing out too early, but keep in mind, guys, this is from 22 to 32 or 22.5 to 32. So you're looking at about 45% gain. So in terms of percentage, it's massive, which is why it had a significant bump on the account. And I'm taking profit at 45% every day of the week. So hoping that it doesn't come off back to VWAP or dwindle down towards VWAP here, or even this pivot point, which isn't too ridiculous to think where it could go back up. I'm taking profit here. It's unfortunate that it just keeps rallying, but it is what it is. So really happy with that. In terms of the actual grades, again, so 1% nickel and less is low grade, but this is like 500 meters, I think it was. So you got 78 plus 306 and 221 and 88 meters. Okay, cumulative. So 700 meters of almost non-stop nickel. Obviously, there's gaps in between, but that is a fuck ton, a metric fuck ton in terms of how much there is in the ground. Now, yeah, it's low grade. It's probably not going to be economical, yada, yada, yada. But there are instances where there's a lot of low grade stuff that can be mineable. I think Newcrest Metals is a fantastic example. I think their all-in sustaining cost is like $440, and your average miner is about 2,000 to 2,400, I think. And that's Aussie dollars an ounce. So there are occasions where lots of low-grade stuff is great, but usually it's when it's at surface as well. So 78 meters, I think this is from, oh no, this isn't even from surface, so from 118 meters, so I don't even think that can be an open pit mine or anything like that. So there's just a fuck ton of nickel. The question is, how are you going to get it out economically? And I have no fucking idea. I just trade this shit. Anyone that tells you, oh, it's uneconomical, it's like, yeah, but the market doesn't care. I mean, if the market actually cared, this probably would never move, but they don't, because it's just a tradable stock, right? You've got a fuck ton of nickel. It's news. It's got liquidity. It seems fucking heavily undervalued at 9 mil market cap at the time for a day trade on Catalyst news event. To be specific, when I say something is undervalued, it's undervalued on the day of the Catalyst event, right? This stock will probably dwindle back down to 20 cents, 10 cents, because, well, it's just not economical. Or maybe it launches to $1. I don't fucking know. But in the long term, this should not go anywhere realistically, right? A little bit of a pop on day 2. And it's actually gone sideways. It actually looks okay. Shit, that's not too bad. And here, for a reference, here's the daily chart as well. That's actually not too bad. That looks interesting. Moving on to PRS. Now, this one was a little bit of just... this was order book fuckery. This was a really strong announcement from memory. No, sorry, a weak announcement from memory, actually. So if we look... Yeah, this is the really, really weak bullshit one. Where you got less than a meter of just really high-grade stuff. Really high-grade trios. Now, if you remember what I said about the nickel, that had massive strikes with fuck all grades. This is the exact opposite. This has fuck all strike with massive grades. So this is the inverse of that, or the opposite, whatever. You've got you've got 20 centimeters of 24,000 ppm. Yeah, the grades are monstrous, but who fucking cares? What are you going to do with this? I guess it's relatively shallow, but ultimately less than a meter of anything, and this is a rule of thumb for me personally, a less than a meter of anything is just not worth anything. Doesn't matter how high the grades are. Especially when you have multiple hits, then multiple hits of nothing is still nothing. What's 0 times 10? It's still 0. At least that's how I process the information. So PRS was just a buy the dip. I can't remember what happened here exactly. I think the order book, there was a big spread in the order book. I could be wrong, but this was a buy the dip for me because the liquidity was just so good. I can't remember why this trade happened here. Someone will have to go back in the replay and have a look on Spark Iguana 2 or something like that. But I remember just being excited about buying the dip on this. I believe it was just due to liquidity. Market cap as well. Sorry, market cap. Oh, that's really important to cover as well. So at the moment at 3.6 cents, they're at 3.8 mil market cap on PRS. And that's, yeah, 3.6 is pretty much where it opened at, because that's the price right now. So 3.6 mil market cap, and that's on the gap up. So keep in mind, guys, this was 1 point, or maybe 2 mil, 2.4 mil market cap. It opens up at 3.6 mil market cap. So again, it's garbage, it's trash, but it's got high grade trash at 3 mil market cap, 3.6. So yeah, there's room to move, right? Low shares on issue as well. So keep in mind, when I say something is trash, that's like long-term investing trash. That's mid-term investing trash. Intraday trash, there are elements that get liquidity. Again, big intercepts, or big grades. And how shallow something is just helpful for how big the move can generally be by the end of the day. So that's always helpful, but it's not a direct significance for how something moves. Because we got 3.6 mil market cap. It's going to launch. It's got something. It's got nothing. Realistically, it's got nothing. But it's got something for today. And for today, it was a buy the dip, add on, because it broke through VWAP, buy the retest, and then just sell out at the retest, or close to the retest at 5.1. I think it was like 5 and 4.9. This is just a cheeky scalp. It's just a very, very good return in percentage-wise. So you got 4 and 4.2, and then 4.5 and 4.4 selling at 4.9 and 5.0. So in terms of percentages, that's a huge trade. In terms of liquidity, there probably wasn't too much there for me to make too much money. But this is where I think a small account really shines, is trades like this, provided that there's no FOMO and obviously buying at correct levels. So we also have a breakout here. You guys know I love my pivots and breakouts, especially when they come back with high volume. So here we are, high volume. Ended up buying the moment there was volume. And they kind of just dwindled a little bit, added on a little bit more, added on a little bit more. Now here's the awkward part about this trade. We've got VWAP here. Now if I stop out too tight, let's say I have an entry at 5.2, 5.3, 5.2.5 or something like that. Am I going to stop out at 5.1 when VWAP's just around the corner? It's like, no, I'm just gonna add on. Just add on at VWAP. And then if it breaks VWAP, then okay, the whole trade is probably done at this point. Might be wondering, well, why is VWAP less relevant here? Well, there's a lot of fuckery. It's very, very, very low liquidity when it hit VWAP. So dipping below VWAP on a specky stock with spread for 100,000 shares, that's peanuts, absolute peanuts. So when you see this dip below VWAP, it's not really a dip. It's not a high volume breakdown or even a medium volume. It's just nothing. It's people throwing $500 here and there, and it just happens to push below VWAP. So just for a bit of reference. And yeah, it was a really nice sort of stonky looking setup. It's kind of making higher highs, higher lows as well. So you can see just higher lows the whole way, all the while making higher highs as well. So it's just a nice little setup. I wasn't too fond of this retest of VWAP, and I was just like, I'm just going to get any excuse I can to just get the fuck out of this thing, just retest. It looked like it was struggling to break out, and of course after I sell it, it manages to pop, but it is what it is. It was still a really good day in terms of percentages, mostly because the morning session was fantastic, and only this half of the trade here ended up being profitable, whereas this was just kind of break even. And then we have LRV. Now, I don't remember what LRV was. We go to the announcements section just to bring that one up. Bonanza. Oh, here we go. Bonanza. Yeah, fucking Bonanza trash. Okay, so we have high percentage of trio, so 1.2%, which is 12,000 ppm for trio. And I can't remember how many meters. It was targeted 500 meter section. I'm pretty sure I just read the headline. Oh, here we go, 6 meters. Okay, so this actually wasn't too bad. 6 meters at 3,000 ppm, 17 meters at 2,000 ppm almost. So these are okay. Right? These are okay hits. We end up with 19 cents at 16 mil market cap. So if we bring up LRV, so 19 cents is pretty much where it's come back to, and that was 16 mil market cap. So for this one, again, this was one of those trades where nothing happened. Ended up taking a little bit, ended up buying on match and then selling for a tick down, so on the same candle. And then just waiting for the range break. You can see absolutely nothing happens for what's that, 10 minutes roughly? A little bit less. And then once the volumes kick in, it's like, okay, it's time for the opening drive. So every tick matters here because it's a stock that's around the 20 cent level. So you're trading at half cent intervals, 20, 20 and a half, 21, 21 and a half. So getting it here at 19, 19 and a half, selling a chunk at 20.5 to lock in some profits, because I think the order book was a little bit funny, or it was heavy on the sell side. I can't remember quite what it was, but I took a chunk off because it was looking a bit shaky. But then once it popped through, bought at 22, sold some again at 22.5, and then the rest of it at 24 and 24 and a half. So you can see that the idea behind the trade isn't for me to just buy one order and then hold it for the whole way. It's scale out a chunk, because if this comes back down, two things happen. One, I'm already in profit. If I break even, I'm in profit. But I'm not going to break even. I'm going to get the retest. I'm going to add on that chunk back here. That's how I do it. So I'm not going to pray, hold and pray. I'm going to scale out, take profits, and then see what to do with the rest. Because I don't think it makes sense to hold through the whole move. It doesn't work. At least I don't find it works for me. So that's how I traded LRV. We also have a trade later on. Now this ended up being a premium setup. We can see I dabbled a little bit here, but cut it very quickly as it was sort of a retest here towards the highs. Now when something bounces off VWAP, I don't chase new highs, especially on something that happens that quickly. It just doesn't tend to happen, especially after a big opening drive. VWAP for me is just a quick bounce, especially the first VWAP hit for a small cap or a micro cap. This doesn't even get to VWAP. I'm almost certain I would have queued up for this one. But you can see it already starts moving. Volume kicks in. As you can see, volume, where am I? I am with the volume. I execute where the volume is, and then find that there's not too much momentum behind it. So close out close to the highs. You know, it's not always going to get to these sort of levels, which are the highs. I think the order book was stacked at 28.5. And I do recall when I closed out at 27.5, a big 27 stack showed up and spooked everyone to the downside. So I got a little bit lucky on timing. But the point is, I was never really going to chase that 28.5. It's just, I like to close out before that happens, before it retests the highs. Now we have VWAP. And then this ended up being a pump consolidate. Now you guys can see in the time here, not every candle has printed. You can see there are gaps, right, from 26 to 29. So 3 minutes where nothing happened between these two candles. So this looks much more condensed than it actually is. This is a much broader time frame than what you're seeing here. So this really is a really drawn out trade. So we can see the last real volumes was just after 11 o'clock. Bought at 12, so that's an hour of fuck all liquidity, and guess what this setup is? My favorite, pump, consolidate, pump. If you look up Demoniaco ASX top 3 setups, that's all you're seeing. All these trades are my top 3 setups. I don't do anything else really. And what you see is a move towards here. There was a little bit of spike on the order book. So I just added on here at 24.5. I think I tried getting 24, it got missed. So I tried adding on at VWAP. And then what happened here? So I'm adding on before the breakout as well. And there's two reasons for this. One is the order book changed. The bids got really stacked from memory. I think one line got stacked. I think 25 got taken and then stacked hard or something like that. I just remember there was a change in the order book, a pretty significant one. And so I started buying. And the second thing is, remember here at 27.5 where I sold out, a 27 order came in. There was about 1 million shares, or maybe 800,000 shares. So what made this trade awkward for a pump consolidate pump setup, or PCP or VCP if you will, that's the proper terminology, is the VCP, is typically what happens on this setup, and I've talked about it quite a lot, is that when it breaks out, it tends to break through the highs comfortably. Now the problem here is that there was so much liquidity, and you can see the volume candle here, 800k, and you're only seeing the you're only seeing the ASX data here. You're not seeing the Chi-X data, which is really unfortunate because I don't have Chi-X for TradingView. But there was a massive wall here, And it's really awkward, right? Because at the bare minimum, this PCP setup retests the highs. And that's like 5% of the time. 95% of the time, just pulling out random numbers here. But generally speaking, it breaks out, retests, and goes again. But there's so much liquidity on the offer at 27 that it was a bit of a hindrance. I was like, 26.5, I'm just going to sell out in front of that wall. Because it didn't look like it was just going to get taken. I know it was looking nicely set up as the lead-in was coming there into the afternoon, but I've never experienced it before, where there's a massive order in between the highs of the day and VWAP, or the break of the pump consolidate setup. So it was just this really awkward spot where I'd never really encountered this before. Even though I've traded so many PCP setups, so many, I've never experienced that situation. So at least now I know that it actually isn't too much of a hindrance. Obviously you can see liquidity dries up once it breaks this these highs. I guess you can say that these are actually the highs here. So you can see the liquidity is dried up. There's no move. Whoops. There is no move above the breakout, which can be explained entirely by this massive seller that was on the offer. So those are the big trades for this account. And I guess you guys can see the style of just cutting, and then just letting things roll. And even when things actually move, is to just be sensible and take profits along the way where they make sense. Now, I'm never going to pick the highs because I'm not much of a top picker. I think that's something amateurs do. I ride the momentum, I ride the volume breakout, and I sell into strength. I don't try and predict where the top is. And I think you guys can just see how it's reflected in the trades as well. So that's it for the trades component. We'll now look at the Samika spreadsheet and look at the breakdown in a little bit more detail. Now we're going to take a brief look at the Samika trading journal. I pasted all the same raw data that you looked at earlier. And there seems to be a couple of errors, but they're all around the stock ticker NEU for some reason. But we didn't take any big wins or big losses with NEU from memory, so it shouldn't be that significant. And for whatever reason, if we scroll all the way down, for some reason the very opening trades for OD6 seem to be causing some errors as well. Otherwise, it doesn't really affect the trading dashboard, but I thought I'd just point that out. So we can see here is the weekly dashboard. So we've got the equity curve here, and I'll just click on each weekly section. So if you guys want to pause and take a look for whatever reason, you can do that. And now I'm going to highlight all the trades, and we're going to look at the stats. So we ended up, after brokerage, we've got a net profit of just under 2K. We ended up with 69 winners, 68 losers. So there's a win rate of 50%, or practically 50%. The profit to loss ratio is 1.6. So we have an average win of $90, average loss of 57. We have a turnover of just under $1 million. And commissions are, I'm not entirely sure if that's 100% correct. I didn't check if this is running on 4 basis points, 5 or 6. I think the default is 6, but I'm not sure if I got the same brokerage as my other account. So I haven't actually looked at that. But let's just assume your run-of-the-mill commissions, let's just call it $500, and gross profit of 2.4K. So that's what we ended up making is 2.4, and then take off brokerage, and we end up with roughly 2K. We can look at the analysis as well. So we've got the weekly analysis here. And this really highlights, I think, the problems with my trades. We have particularly the morning, lunchtime, and afternoon. So morning is the bulk of the profit. Lunchtime is where we give back so much. And then the afternoon is where we pretty much make up for the lunchtime losses, generally speaking. So lunchtime is defined as 11 a.m. to 2 p.m. And afternoon is 2 p.m. to close, and morning is just 1 hour, so the opening match to 11 a.m. So you can see the bulk of the money is made in the morning and the afternoon as well. And just go through some stats here. we pretty much made all our money from the long side because we're trading mostly speckies. And we can see Mondays, I've noticed, just generally speaking for the last couple of months actually, Mondays have been really poor for me. Just liquidity, that's the fake outs that happen. VWAP's not holding, stuff like that. So Mondays are a bit rough. Fridays are a little bit dull as well, but they're not bad. They're just flat. Tuesday seems to be great, so pretty much midweek is perfectly fine. And we can see that's pretty much it in terms of the analysis. Monthly analysis should be exactly the same. And that's pretty much it. So guys, if you made it this far in the video, thanks for watching. And I think my next video might be something like 2K and see where I can take a 2K account to. Otherwise guys, thanks for watching and I'll catch you in the next video. Cheers.